I have to say, I've been completely fooled by your background. I thought that was an actual kitchen. Very nice background, I have to tell you.
Thank you very much. It falls the best of them, I have to say. And what's astonishing is I've had meetings at 6:30 in the morning during the winter. Actually, I usually keep the same background on, uh, and and there are people even when it's dark outside saying to me, and they know where I'm based, saying, "Wow, you've got a great garden." And it's like it's winter, it's dark outside. It doesn't look like it's winter and dark outside, but
Let's start with the name of your business and what your business is all about.
yeah. So Schaker Property Investments is the name of the business, and I set the company up end of 2019. So moments before COVID started to spread around the world, and the business really is fundamentally helping investors to build wealth from UK property, and that's really the basis of what I do. Um, Specifically, it's around helping investors with buy to let properties, and the focus is really the East Midlands, very specifically. And really, what I do is help investors just from start to finish, so the entire journey. There's a lot of private individuals at the moment, some in the UK, some outside of the UK, who really aren't sure what they should be doing with their capital at the moment. I think all markets, have gone a little bit crazy
Hmm.
over the last couple of years for sure, and people, for a number of reasons, aren't really sure to put where to put some of their money. So, really, what I do is, as I say, start to finish, understand what the objectives are from the investor. What are they trying to achieve? They're just trying to build up a nest egg. Are they trying to generate cash flow? What are they trying to do? And over what time period? And then it's a question of me being able to go out and source property. So kind of like a personal shopper in a way, to find something that is going to work for them to meet their requirements. And then really it's a process whereby I help them to add value to that asset. So that could, and most common is a refurb, where I can provide, first of all, it's costing it accurately, but I can provide the build team to manage the entire refurb all the way to that property being handed over to a lettings agent, and that automatically happening. So the investor, in essence, only has to worry about is the money dropping into their account every month, and they don't have to worry about all of the details.
Okay. So why East Midlands specifically? Why not London, for example?
Yeah, so for buy to let, the buy to let market has changed over time, and there are different places, obviously, where investors will either want to invest or they've heard of, particularly international investors. They might only really know about London, possibly Manchester, and their view is big, shiny tower blocks, the new build and off plan. Um, for me, the East Midlands is a kind of sweet spot in the UK property market. Number one, it's got a very low entry point generally, so investors can buy property for much more cheaply than they can in other areas, for example, the southeast, and the returns are much better. So, in terms of what the investor's going to get, a return on the cash that they put into any deal, it's a lot higher. Now, I suppose the other point of that is there are areas, regions within the UK. So let's say the northeast, and I'm not knocking the northeast, but the northeast is, good if you get the right property in the right town and the right partner. Um, for yields, it's good. It's good for cash flowing. But in terms of capital growth, if the investor wants to either cash in their chips at any point in the future, or they want to refinance against an increased in value asset, or they just want to have you know, maybe they want to keep a cash flowing asset, but just as a plan B, they want that option to sell for a profit later on as well. And I think the East Midlands provides that really nice balance of cash flowing property, low entry point, and also capital growth potential.
I have heard something recently that supposedly the Midlands are a better investment for cash flow investments such as buy to let, and then southeast and London area is better for flips and stuff. I don't know how true that is, but I heard it in the book. So I think there's some truth behind that. And what kind of property do you target? Specific properties, or are you just looking at any kind of deals that may come your way?
Yeah, it depends. As I say, I mean, I think in particular towns and cities that I focused on, and I've got very strong networks in each of those towns and cities in the East Midlands. There's a lot of traditional property that, let's say, tends to be period property, maybe 2 bedrooms, and a lot of those properties make excellent. I mean, they're versatile, but they make excellent family rentals. There's always the option. So, for example, part of that value enhancing process, you know, it could be just refurbing. It could be, you know, as simple as new kitchen, new bathroom, and so on. But it could be actually adding another bedroom. So the configuration of a lot of the older properties still allow you to add another bedroom, to move the bathroom upstairs in some cases. So there's certain things that you can do, and there's very good stock, housing stock in parts of the East Midlands where you can make that happen. So it tends to be, let's say, the sort of 2 to 3 bedroom, just because the price point and the numbers work very well, but also there's ongoing demand for family housing, and in certain areas where actually rentals are very high as opposed to sort of owner occupying numbers, you know, I have to say that you know, it's very good opportunity for investors because there is such strong demand for those sorts of properties on the rental market.
Right. And do you do HMOs at all, or is it purely family homes?
No, so some of the properties actually that I do offer to investors. In fact, there is one. So every week, every Wednesday, I send out an investor email of the best opportunities I can find that week. This week, there is an HMO opportunity where actually the returns are pretty good for the investor, but the refurb is slightly more involved because there's a few things in order to comply with HMO regulations you need to do that possibly you won't need to do with a single let, a standard single let. So there's more compliance with multi-let houses for investors, but in the right area, of course, and managed properly, the returns can be that much better. So yes, single lets, multi-lets.
Okay, fine. Now, how did you come about opening the business? What's the backstory to it?
I'm not sure it's that interesting. I guess probably about 19, 20 years ago, like many people, I also decided I would individually go down the buy-to-let journey, buy-to-let route, which I did in my hometown. And it was always for me something of a sideline. So it was always for me something that was, yeah, going to be a pension or something in the future. But my background until a few years ago was very corporate. So I sort of worked for you know, BBC, worked for big mobile networks, you know, being in different regions, living and working around the world. So property was just something that I did a bit on the side. And I suppose I then, when I was living in the Middle East and in Dubai, I started to invest into other people's projects. You know, as a passive investor, I also found it quite difficult actually to manage property that I had back in the UK at that time. And slowly I started to kind of understand that actually people that I'd met out in the Middle East, both expats and international investors, were interested in UK property. They didn't know how to invest. And that really was the start of me thinking, well, actually, I think there's a way of helping investors, not just international investors, but UK investors, to make money out of property, because it can be very quickly a full-time job. Most people don't get into property investment in terms of getting a buy-to-let or so on. It's for their future, it's for their pension, it's for their children, it's for financial freedom. It's not to create a new job. So that's really where I started to think, well, hang on a minute, this is something I'm doing, I enjoy. It can be full-time to do it properly. So why don't you help other people do the same thing? And that's really where it started.
Okay. And are you invested in the same areas or they're slightly different?
It does depend. So as I say, for buy-to-let, my approach is very much East Midlands for two reasons. One, I think it's that sweet spot, it's a good investment. Number two, I can actually deliver quality of service, quality of product, because I have people on the ground there who know what they're doing that I work with. So it's pretty clear for the buy-to-lets. In terms of other sorts of investments, I won't get into the 101 ways to make money from property, but yet there are other ways. Some of the projects that I invest in outside of buy-to-lets are in different places, and they're different strategies, to be honest, around the UK, but they're all in the UK. So I don't invest in property outside of the UK. I stick to what I know.
Makes sense. Yeah.
Yes.
And for your investors who purchase property, so do they have to pay the entire price of the property, or is it a mortgage? Is it mortgage paid or is it cash paid?
Again, it depends. So that there are some investors who will want to purchase a property rather like a typical owner-occupier might. So they might get a mortgage arranged in principle from a lender, and they might come to me and say, here is my budget. I've got the mortgage agreed in principle. They just need help to find the right kind of property where the numbers add up. Other investors will be cash purchases. That doesn't necessarily mean they buy in cash. They keep all of the money in the deal, in the property. It might be that an investor wants to buy a property outright for cash. Then the refurb, the renovation that I talked about might be for argument's sake, might be a 1-2 month project that I would manage on their behalf. And then at the end of that, so 6 months, for example, after they purchased that property and the refurb works have been done and you've added that value, they might decide then to refinance. And that's typically what does happen. So the lender will then basically put a mortgage, onto that property. That allows the investor to pull most of their money back out and then recycle that into another property. So it depends on the investor, it depends on the property, it depends on their objectives. But generally, given how cheap finance is at the moment, the less money you can keep in a deal, in a property, within common sense. You don't want to sort of over leverage yourself, but it makes sense to use finance.
Yeah, I agree for sure, because obviously you can buy more property that way, and you can do much more deals at the same time rather than one a year, or say 4 a year, because it's 25% down if it's a buy to let, isn't it? So if you have 100 grand, so either you buy for 100 grand or you can leverage it and buy 4 houses technically. So which is great. And so in terms of your package and your services, so you source the deal, you help them purchase it. So you overlook the entire refurbishment process and all that kind of stuff. And then do you do the property maintenance as well, and finding the tenants and everything else?
Yeah, so I mean, there's for buy-to-let investors, there's really 2 ways to go. There are some investors, some investors are much more sophisticated than others. So you might have a first-time buy-to-let investor who kind of wants help and support from start to finish, everything done for them, and that's not a problem. And then you have other sorts of investors who they might already have a buy-to-let portfolio. They might already have an HMO or two or three. What they're looking for is a deal that stacks up. They want someone to go out and find them that opportunity because they don't have the time. They might not have the network because it might be out of an area they traditionally have invested in. They just want help sourcing. So I can just source opportunities and say, okay, I found you the deal, and that's fine. Or it can be from start to finish. And as you say, with the maintenance, so you know, the towns and cities that I work in the East Midlands, I have that network on the ground, including lettings agents. So it's the whole thing, start to finish.
Fantastic. I'm sure a lot of people find it very useful to, you know, find a place to put their money, and properties is a fairly safe investment, isn't it? Worst case scenario, you still have your money there, and even if there's you know, property crash or whatever, you know, all that's gonna mean is that you know, your monthly payments are gonna go up, but probably not by that much to actually feel, you know, any kind of pressure. You'll probably, you know, worst case scenario, you'll probably just even it out, and then you have to just sort of wait until the storm passes, and then you're going to start making money again, or you can sell the whole thing altogether. In terms of your, go on, sorry.
Just on that point, I was going to say, I mean, it's I agree with you to a point. I suppose I heard a phrase the other day I hadn't heard in a while about haircuts and investments, and you know, people saying that property investments like bad haircuts, and I've had a few, you know, are the same in terms of a bad investment will also grow out, which I think is kind of what you're saying in terms of, you know, if you can weather the storm. I think the worst thing that an investor can do is it's kind of two things. One is not to be pursuing a buy-to-let property that doesn't cash flow positively from day one. So kind of relying on maybe capital growth or hoping that rents will match that initial investment, and over leveraging. So you know, if the numbers work from day one and you can weather that storm, in other words, an investor that might want to take all of their money out of the deal in 6 months or in 12 months, and they don't have a plan B that they can stick to, that's when people get into trouble, I think. As you say, property, yes, there are shorter term strategies for property, but property, UK property investment, you know, it's much more a long-term game, basically. And if you put yourself in a position, either because the numbers never worked to begin with, or your circumstances change and you're forced down the route of plan B, and you didn't have a plan B before you started, that's really where the problems start. But I mean, you know, from a long-term point of view, property is, you know, much more likely, in my view, to you know, give you the sort of returns you're just not going to get if you leave that money in the bank and procrastinate. You know, it's just not going to happen.
Well, the bank isn't paying anything nowadays anyway, so it's essentially just put like a little treasure chest for later, so it doesn't do anything for you. So you obviously, if you have enough means to invest, then, you know, property is probably the way to go. I had a look around your website, and there was 3 properties where they've been already taken by the investors, and and I think you provided estimated return on investment as well. So those percentages, how accurate are they normally? Like what's the sort of what people should expect?
Yeah, well, I mean, I suppose for me, the return that an investor gets on their money is, you know, that there's a certain amount of due diligence that I will do on every single deal before presenting that to an investor. And I share that due diligence with the investor. So, you know, it's very much based on the money that they're putting in terms of the purchase price, in terms of the refurb, in terms of all the other fees are all detailed. So there's no nasty surprises. There's nothing that comes around after the investor has sort of you know, put their signature on the paper to say, well, they didn't realise that this cost or that cost was added in afterwards. So I guess it's very clear numbers at the beginning. The numbers are based on reality. So I guess even the rental comparables, the sales comparables for the area, that's all provided. Clearly, investors also, which I encourage all of mine to do, need to do their own due diligence, need to do their own research, and need to validate the numbers and the examples and the research you've done and provided to them. But I think that's, as I say, I always encourage my investors to do their own research, to challenge the numbers, to not just accept what they're given, but all of those numbers, as I say, very transparent from the beginning, because most of the investors that I want to work with and do work with know their numbers. So the starting point is really the numbers, and then providing information that's kind of what's behind the numbers in terms of, is this really a good neighborhood? What's the capital growth projection in this area? That's kind of the stuff behind the numbers. But the starting point for me is always, here are the headline numbers. Here's what sits behind those numbers. Here's the evidence, if you like, about why these numbers are sound. And then usually provide a lot more detailed information about, for example, tenant type, neighborhood, local economy, all this kind of stuff. But of course, same with any investment, and as we've seen with COVID, you never quite know what is around the corner. You never really know, okay, well, what is this going to make in terms of capital growth next year, as opposed to the year after? You've got projections. You don't know for sure, but what we do know for sure is that UK property is certainly a tangible asset, and if past performance is any kind of indicator, it's consistently performed very well. And let's face it, UK property is, there's a shortage, there's a chronic shortage, not just a short-term shortage, which there is now, but there's an underlying supply problem in the UK. So long-term prospects very good.
Yeah, I couldn't agree more. Same thing with London, same thing in the entire country. The developers, even if they want to develop more land and do it much more quickly, there's so much bureaucracy and so many hurdles to jump through and so many loops, and some councils would ask for 35% of the development. For example, if there's a large development, they can ask up to 35% of development to be affordable housing, which essentially means that the developer doesn't make any money. So when they take out 35% of that, there's some deals just stop working straight away. So it can be a multi-million-pound deal, and because of what the councils demand, because essentially that's what they do, the whole thing just collapses before it starts. And so I think because and there's the infrastructure fees and all the rest of it is just piles on. But that's obviously talking about developments as a new builds and things like that. With buy-to-lets, they put a cap on as well. There was a few years ago, you used to be able to go to the bank and get a buy-to-let for 10-15% deposit. Nowadays it's 25% minimum, and obviously as the prices in London, average property price is 400,000-500,000. So 25% is 100 grand before stamp duty, and then stamp duty, obviously we have the holiday now, stamp duty holiday, and then the legal fees and everything else. And so essentially you have to have 150,000 pounds in your bank, which for most people is just ridiculous. That's never going to happen. So if they manage to buy a house for themselves, it would be very difficult to buy a buy-to-let in London. So starting, for example, in this East Midlands makes a lot of sense, because obviously you need much less and you can still get on that ladder, especially when you can get most of your money out with a BRR scheme, right? So it's a buy, refurbish. How does it? I don't remember.
Refinance.
Refinancing. There you go. Well, you know that better than anyone, right? So yeah, that's how it is. And in terms of your clientele, so is it just working people, or is it business people, or is it organizations that you normally use your services?
Yeah, so I mean, it depends is the answer, but I mean, a typical client is either an international client who wants someone who has the UK knowledge and the network and is based in the UK.
Hmm.
And that, as I said earlier, can either be an international investor or it could be an expat. Um, so, quite typically you'll have a UK, a British expat, as I was living abroad, living in Dubai, and just wanting really help to make those sorts of investments, not to make any mistakes. They want someone to help them. And in the UK, quite a lot of business owners. So, a lot of clients are entrepreneurs, small business owners, and they're looking to either start or to grow their buy-to-let portfolio. So it's one of those things, that I mentioned at the beginning. There's an awful lot of people for a few reasons who have a certain amount of capital where it's risky just leaving that in the bank, doing nothing, devaluing with inflation over time. And it's also that opportunity risk of, there are lots of ways in property to, even if we're talking about something quite conservative and saying, I don't know, sort of 6-7% even, return on their cash. Add that to inflation, and it's kind of like that they've taken a 10% hit in 1 year on their capital in terms of opportunity cost and in terms of inflation. And finding deals, for me at least, that can offer investors, let's say conservatively 10% return on their cash per annum, seems on the surface like quite a good deal, quite obvious, but there's still a lot of people who struggle with that and can't quite get their heads around that there's that much gulf between what's happening to their money at the moment and what they could be doing with property. But yeah, so lots of expats and lots of business owners basically.
Yeah, I think a lot of people obviously want to double their money in 1 year rather than 10%, so that they have trouble with that. So some try stocks and shares and cryptocurrencies and all that kind of stuff, and then
yeah, and that's the thing, and you do. I think one of the things that I'm constantly surprised at is number one, people who would rather, or not rather, they like the idea, as you've mentioned, of something kind of crazy, let's say there's an investor who's got, I don't know, £100,000 to keep the maths simple. They might like the idea of doubling their money to 200,000 within a year. But would they like their money halving or quartering to £25,000 in 1 year? And when it comes to that kind of sum, often you get investors who, yeah, they might do that, but they might just think they'd like to do that. But in the end, they're actually still doing nothing with their money. And in the meantime, it's devaluing. So, I think the issue is also with buy-to-let property. You mentioned that things have changed over time. You used to be able to have a smaller deposit. The tax changes mean that things are different on mortgage tax relief and so on, in terms of whether you hold the property in your own name or whether it's in a limited company name. There's lots of things that have changed. And I think also some investors who perhaps are more experienced with property, they kind of believe that maybe some of the deals that worked yesterday will still work tomorrow. And so you get a lot of people who are just holding out for that opportunity where they can pull all of their money back out, and then they just kind of recycle, and they don't have to leave any money in a property. They can just do a refurb and put it all out. Those those sorts of deals are becoming more and more difficult to find. You will always be able to make money from property. How you make money changes over time. And personally, I think, the worst thing you can do is to just be on the sidelines, hoping for a better deal tomorrow when there are great deals today. You just need to know, where to find those deals, who to work with, what sort of deals you should be looking for that are working today that, maybe weren't working yesterday, and get on with it, essentially. Because in the meantime, there are plenty of investors who, particularly first-time investors, who are now entering the market, and the market is still moving. And if you don't seize those opportunities, might come to regret it. Because I think, you often get people trying to time the market, and we've seen that over the last 2 years. People waiting for a crash that never came. It was going to be Brexit, it was going to be the election, it was going to be the pandemic, and on it goes. And you have people just waiting for that property crash, and no one can predict what's going to happen, but that property crash hasn't come so far. And in the meantime, there have been lots of people investing in property, making money from property, and seizing the initiative.
Yeah, you can't really time it correctly anyway. It's same thing as financial markets. And in terms of opportunities, you obviously there's a saying that you miss 100% of opportunities that you don't take. So you have to take a chance. So you can't just nothing's going to fall in your lap, and you have to take chances, and you have to understand that some investments are going to work, some will not. But you just need to find one strategy that works, and then just keep at it, kind of thing. Then just scale it, right? So if you buy one buy to let and it works, and if you have the finances, and even if you haven't, there's always people with money. There's always people who want to invest money. If you found one way to make money, then just pile on and do do at a scale. In terms of Dubai property market, so what time did you live there, and how what was your impression of the Dubai market? Was it insanely overpriced? Was it reasonable? What was your opinion about that?
There's a question. Yeah, well, so I moved out there January 2013 full time. So I was resident out there for about 6 years, something like that. And great country. So Abu Dhabi first, Dubai second. Yeah, I mean, things work slightly differently out there. I suppose observations in terms of when I landed there, the rental market was more expensive than I was used to in London. And the residential sales side of things cheaper. Depends, because there are some very distinct niches out there, kind of super prime type niches, but generally speaking, the property was cheaper to buy, more expensive to rent was my observation. I didn't participate in buying any real estate out there while I was there. As I say, UK in terms of buying, I mean, there's other sort of strategies that you can do out there. That's maybe for another day, but yeah, I did find that I was tempted, because shortly before I arrived, I think there'd been a couple of big corrections in the market, and I knew a lot of people out there who had made from flipping, quite a bit from property. But as I said a couple of times, I think you have to know what you're doing. Otherwise, you're just relying on luck. And some people, I think, made a small fortune from luck. I think it could, and for some people, it did kind of go the other way eventually. So for me, I understand UK property. I can't say I really understand the market dynamics, which are very, very different to the UK in terms of Dubai. But still, certainly a great place to live and work.
Yeah, stunning place, because I've been both to Abu Dhabi and Dubai, and both. I mean, Abu Dhabi, I didn't see as much because we just had the day, so we flew on a plane, like on a seaplane from Dubai, so it's like an hour flight. And we were just sort of, visiting, having a little look. Went to the Ferrari park. You've been there?
Mhm.
Yeah, that's pretty cool. And then they have that 240 kilometer an hour ride where it's just like a rocket. That's pretty cool. Abu Dhabi in general, yeah, it was really nice. And then obviously you fly back to Dubai, and it's just all the skyscrapers and all the real estate and villas. And obviously, if you go to the Palm, and then you see all those amazing houses, and the Palm structure itself is a miracle, isn't it? The way they built it. Because when I was there, I didn't research Dubai that much. So I went with my partner at the time, and she was like, "Oh well, yeah, this is man-made." I was like, "No, you're mistaken. There's no way you can build this. There's literally." And I couldn't believe it. So I had to go to YouTube and watch a bunch of videos how they done it and how much time they and money and expense they. It was amazing. It was absolutely amazing how they done it, and the effort they made, and the vision they had, and then what they've actually built, and then the number of houses and stuff. Because I think the value of those houses like quadrupled in like the first 6 months or whatever, because of people didn't really know whether it's going to work or not. But then as soon as people bought them, that was it. There was no one was really selling them, I guess, because they were so exclusive. There's no place on earth that you can have a house on a palm like that. So on a palm tree. So it was really cool. And all the landmarks, obviously, the Burj Khalifa, the fountains, the big Atlantis hotel, just everything just really, really good, like top quality. And I have also noticed that the majority of prices were higher than London, which was, a bit scary. I was like, wow, because they're supposed to be, they're not paying any taxes. So, foolishly, I thought, oh, okay, well, that means that things are going to be cheaper, but they were not. But definitely a place to visit and put on your bucket list if you like travel. It's a great place to be.
Sure.
As a business owner, what are the challenges that you face on a daily basis, or the biggest challenges?
Biggest challenges. Well, I mean, I think for every business owner, there's not just in the last 12 months, but as a general principle is, you're going to have change every day. And for me, it's always about trying to, in terms of scaling what you do, or just trying to be as efficient in what you do, it's trying to replicate a lot of the processes that you do day in, day out, and automate a lot of those processes as much as you can. And then try and delegate as much of those processes as possible, that then frees you up to, do what you're good at, and ultimately to try and outsource that as well, so that you're effectively just managing, the important bits, almost, conducting the orchestra, as it were. So, what gets in the way of that? I mean, those things can happen over time, but I think what gets in the way of that is that things change an awful lot. So you will try something, it will work, you will try and systemize it, but then something else happens. You get a headwind coming in from somewhere else, you get another strategy coming in, you get something in that you might have to firefight on. So yeah, I mean, I think for me, I kind of like change. I like things being fairly fluid. It keeps things interesting. But certainly trying to stay on top of that. If you have people supporting you in what you do, and working on projects with you, that can be a challenge, because in order to support you, they need to know what's going on, what they need to achieve, and if, not saying the goalposts change, but if if the landscape changes, and sometimes can change quite quickly, it's how you manage that entire process to make sure you end up, in the right destination, despite the ground changing from when you started, let's say.
Hmm.
What
Yeah.
about you? What's your biggest challenge?
I think just managing people is probably one of the biggest one, because obviously, you know, we have a construction company, and it's relatively big in terms of, you know, the projects and number of people involved, and we have a, you know, a large office as well. So it's, you know, it's just managing and making sure that everyone's doing what they're supposed to be doing, because it's very easily to get sidetracked. I get that all the time. You know, you do, if you're in the middle of something and then the phone rings and you completely, you know, 2 minutes later you're like, what the hell was I doing, you know? So probably that, it's just reliability and management, probably one of the big ones. In terms of changes, I like them a lot as well. I think adapting to situations is what is essential, and I think one of the reasons why, you know, 97% of businesses go bankrupt in the first 5 years is because people just can't adapt to situations. They sort of find a nice warm space, they sort of build a little nest, and then things turn, and then, you know, that doesn't work anymore, so you have to do something else. And I think business is like that all the time, especially now with COVID and everything else. You know, so much stuff just changed. We used to visit our clients a lot at their houses. Nowadays probably 50% of those meetings are online, you know, Zoom calls, Skype calls, or whatever, and it works perfectly, and there's absolutely no need to spend, like, for a surveyor to go spend an hour that way, spend another hour there, and then an hour back, and stay in traffic, and spend the time, money, petrol, and all the rest of it. I think people are more sort of open-minded now to online meetings, and they do work. Big organizations, they sort of, I know a couple of people who work in big organizations, and they just, you know, they switched really quickly, and all their meetings and all the discussions, they were all online, and it worked. And then some people were actually reporting that they were more efficient than when they were in the office. There's definitely benefits as well as, you know, certain downsides with having issues that we had the last year. And speaking of, obviously, COVID and Brexit at the same time, how did that affect you and your business?
Well, yeah, I mean, I'm not sure it had the kind of negative impact that I thought it was going to at the beginning. And what I've seen is some people did quite well, or coped quite well, you know, possibly by luck, possibly down to the sort of business they had, possibly down to some of the actions that they took. And others suffered much more. And obviously there are certain sectors where, you know, that was kind of bound to happen in some ways. So for me, kind of pluses and minuses, I suppose. A lot of business that I used to conduct anyway, from when I did live overseas, was done, you know, I sound a bit of an old timer now, but, you know, using Skype video rather than Zoom. So I'd used Zoom probably 2 or 3 times before COVID hit. And certainly never really used Zoom in the way people use Zoom now, where, you know, you might have sort of 60 people online for big events and so on, and people actually managing meetings and so on via Zoom. So in some ways, certainly on the plus side, it felt great because other people, so I was used to doing a lot of calls and meetings and so on online, you know, on camera, whereas it wasn't so much the done thing. I mean, there were certain sectors, maybe tech sectors, people who worked internationally, who might have been, you know, using comms in this way. But I think if you said to the average investor or the average client, let's jump onto a Zoom call, or let's jump onto a Skype call, rather than going to meet them face to face, even though that might have taken, depending on where they were, the best part of the day, you know, to go and see them and then come back, and then can't really focus on other things. It wouldn't really have happened. It was I think probably viewed a little bit odd You know, it wasn't quite. I mean, it certainly wasn't as mainstream as it is now, and I suppose, you know, COVID kind of accelerated that. People certainly say it's accelerated tech, you know, in terms of people's attitudes and so on by maybe a decade. Don't know how true that is, but possibly quite likely. So yeah, I think communication and being able to, you know, network and prospect and have sort of client meetings, able to do that much more than, you know, so the volumes increased, you know, sort of post COVID, if you like. Obviously the quality, I mean, people have adapted, so you can still, you know, form very good relationships with people via Zoom. Some people struggle more than others, but of course there's no substitute for face-to-face. And I suppose also, you know, the biggest thing for me, just bearing in mind that, you know, I'm in property, is that being able to go and view properties was initially during lockdown 1, where lockdown was kind of complete and utter lockdown, was a bit tricky. Now there's a certain amount that you can do online viewings, and a lot of that technology is also developed. And also there's a lot of, you know, let's call it desktop analysis that you can do and get people in situ to do, you know, either a tenant or an owner or an agent, to be able to go around with a video camera and show you, you know, the darkest corners of a house or a property, you know, on your behalf. But that did have a knock-on effect then, that actually, all right, it wasn't just the viewings that were limited, it was then actually people feeling comfortable to, let's say, put a property onto the market in the first place. Or if they had tenants and they weren't actually living there, of course, then you have to consider, well, is it right to have people traipsing around the house when you've got tenants there, because you have to think of their welfare. So it certainly did have an impact on, I think, some of the supply. And so that had an impact. But I have to say, you know, the deals, you know, still come along. Right, there's a question about the flow of those deals, both during the pandemic and now. But there's always deals available, and with people working from home more, you know, I think it's easier to have those kind of investor calls and investor meetings, and to build those sorts of relationships and see how you can help people. So it's hard to see, you know, that it's been overall positive or negative. I'd say in many ways it's been positive, just because, you know, the use of technology has accelerated. But, you know, certainly, you know, ups and downs, I suppose.
And depends on the industry. If you'd be in hospitality, I know exactly what your answer would be, because obviously, you know, they were the hardest, unfortunately. In terms of the property market right now, I understand due to a holiday, do you feel it's a good time to buy property in general?
I think I can honestly say that, you know, whenever you would ask that question, I would say the best time to be buying is 10 years ago, or, you know, a year, 2 years, 3 years, 5 years, 10 years, 20 years ago. So, you know, for anyone serious about building their wealth, anyone serious about investing in property, you know, you shouldn't wait. Is my view. You should find the right kind of investment that's going to work for you. That there are always opportunities in property. There's always ways to make money. The only reason you might reasonably wait is if it's not right for you at that particular moment in time, or you've got a crystal ball and you know what's going to happen to the market. And I think as we, you know, as we've been shown, no one knows what's going to happen in the future. No one knows what's going to happen with prices. I think, as I've said, you know, a couple of times, one of the issues in the UK property market is there's an awful lot. I know there's a lot of people who are suffering as a result of COVID, and this is not a universal thing, but in terms of investors, that there's an awful lot of money sloshing around. at the moment. Partly on, in terms of personal finances, there's a lot of people who, let's say, were, not going on holiday, not going out, not spending money, their disposable income and so on, and building up, more capital. So there's that kind of money. There's all sorts of other things, bounce back loans and so on, that have had impacts and found their way into, rightly or wrongly, property. And also in terms of mortgage finance, interest rates, can't deny, still record lows. So there's an awful lot of money around. And again, with the supply, long term and short term, that money has to go somewhere. And so the market continues to be quite buoyant, but partly for those reasons, and there's a bunch of others as well. And the worst thing I think for an investor is to say, well, I'll wait for the right moment. It may or may not come along. If it does come along, are you even going to know it's the right moment? People also, looking back, can say that was the right time to enter the market. But when it's actually in the here and now, a lot of investors struggle with knowing now is the time to pull the trigger, because you don't know when you're at the bottom of the market. You don't know when you're at the top of the market. You can guess, you can look at cycles and what's happened in the past. But the fact is, for what it's worth, I think, investors that take that initiative, see where the opportunities are today, and take the initiative today, will be glad that they took that initiative looking back.
It's a lot of it is about research and due diligence, like you said. So you do need to research and understand, what kind of market you're going into, and obviously yourself as a company and individual, you're doing exactly that. You're reassuring that, okay, this is a good way of investing your hard-earned money. So I think people would definitely benefit, and it kind of like a quick level up, rather than investing into education for a couple of years to understand the markets and everything else. They can go to someone like you and say, okay, well, I have this money, I want to invest, I want to get return on my investments on a buy to let or something else, and then you can provide those options. So that I think that in itself is amazing. And people who didn't struggle and worked from home, they obviously didn't spend as much money as they would have if it'd be all open. So I think that that going back to your reference where you said there's lots of money slushing around kind of thing. Apart from the fact that there's always people with money, I think people who had their jobs this year and worked from home, and there was no furlough or anything like that, they just worked throughout, I think they spend a lot less and they saved a lot more, and then so they have more money, and then now they're just looking at opportunities. And obviously that's I would imagine that's great for you. Which actually leads me to my next question, marketing and sales. So do you do like, is it like reference? Do you have a little club? How does it work? How do you bring in leads and sort of show the people? I guess when you do it once or twice for people successfully, naturally they're gonna spread the word, right?
Yeah, I mean, it works in different ways, I suppose, and it probably does for you as well. And if anything, it's also keeping tabs on what's working, what isn't working, and how did someone approach you in the first instance, because that's often how it is. So for me, I get a lot of inbound inquiries, either directly from social media. So I try and post as regularly as I can. Most days I'll post something on social media, and so over time people start to see that you are talking about a lot of things that might be of interest to them in terms of property investment. And when it's the right time for an individual investor, they might then, as they do, reach out and just start a conversation, and that's really how most of it starts. It's starts with a conversation where someone is just asking questions. Well, what do you think of this? What's your view on that? What do you do? How can you help me? and that's kind of where it gets to. Also, I suppose just in terms of networking, so various business networks that I'm a member of, and so through that also people might just, again, it's a similar pattern, I suppose, in terms of people just saying, well, I've thought about this. If they're a new buy-to-let investor, I'm not sure about A, B, and C. What do you think? How can you help me? And on it goes. So yeah, I mean, different sources. I mean, I don't currently put any money into paid advertising. It's all kind of networking. It's all organic, essentially, and it's all from social media. Just trying to put yourself out there to give a view on the market and what you can do from property investment. And then just, when people have an interest, they know, more who to reach out to.
Amazing. It's good for you that you sort of use the social media to its best abilities, and just post and interact with people, and naturally you're gonna get some interest from other people, especially when it's to do with money. In terms of, a lot of people would love to hear what you're going to say about that. In terms of your fees, would that be like a flat rate, or is that very sort of bespoke project to project?
Yeah, it depends. So on the buy-to-let side of things, so if an investor wants me to help with their requirements, so their starting point might be chapter 1, if you like, of just not really sure whether I want cash flow or capital growth or whatever. It's the real starting point. Then generally what I will provide in terms of that start to finish service is a flat fee, and that kind of depends on the sort of property and the sort of opportunity and the service that they're looking for. There are other projects certainly that I work on in terms of property investment that are more bespoke, and that's again very much an organic conversation around an individual investor who might say, actually, I'm a bit more ambitious in what I want to do in property. They might already have buy-to-lets, they might already have done property developments, other property investments, and then it really, there's no sort of set structure to that conversation, because it might be from my network and my experience that there's a way of working together that's very unique, very bespoke. But in terms of the buy-to-let service, where an investor either wants me just to find something for them and that's it, or they want me to take them through that start to finish, what's going to make sense for that investor, sourcing them something, managing refurbs, getting the built-ins to do what they said they'd do, and getting lettings agents and the maintenance side all sorted out. That's basically a flat fee. Yeah.
Okay, fantastic. And in terms of getting in touch with you to have a conversation, so normally if people will get in touch with you, so would you schedule a sort of like a consultation or something?
Yeah, I mean, that's usually how it works. So typically what would happen is someone would reach out to me on social media. We might exchange a couple of messages, on LinkedIn or on Facebook. And if I think just from, a few exchanges of messages, I might be able to help them, or it might be of value to them just to have a sort of 10, 15-minute phone call, then that's normally the first step. So it would just be reach out to me on social media. LinkedIn's a good one, Facebook is a good one. And then just to have, possibly a 10, 15-minute phone call. And if I think that I might be able to help them, then we can kind of have a further conversation. If I don't think I can help them, I'll be honest and I'll say, I don't think I can help you. Because sometimes people don't have realistic expectations, or sometimes they want to do something that's, maybe not what I'm a specialist in, or they might want to invest, in something that I can't help them with. But I'll tell them that quite early on.
Okay, well, that's all they need to know. So to our audience, please get in touch with Gavin and have that consultation and see if he can help you. Gavin, thanks very much for your time. Appreciate it.
Thanks, Adam.
I think it was a really good talk. Hopefully, you'll get a bunch of inquiries following this podcast, and we wish you all the best. And we'll be in touch.
Thanks a lot. Cheers, Adam.
Fantastic. Thank you, Gavin.